What is canceling? A quick overview with the disciplined mind investors.
So the first thing that we want to say is this is just an overview. To be able to execute this trading system, you must learn the whole system. This is not a shortcut. Get the book. The link will be in the description.
What is canceling? Canceling is a rule-based investing strategy that combines overall market direction, fundamental stock analysis, and technical chart analysis to get you trading big growth stocks.
Keyword big. So who invented canceling? Obviously, we want to know where the strategy came from.
This strategy came from William J. O'Neill. He was born in Oklahoma City, Oklahoma in 1933. He started as a stockbroker. He did extensive research on big growth stocks. And in fact, not only did he do research, he was able to hit a few big stocks. And what he did is he was able to identify the traits of these stocks and possessed and developed the system of canceling. In addition, he read several books that were the pillars of this strategy. Then, once he started investing and started hitting home runs, he founded William J. O'Neill and Company. They're the first computerized daily securities database. They sold research to institutional investors. In 1972, he launched Daily Graphs, which is now MarketSmith. And then in 1984, he launched Daily Investors Daily, which is now IBD.
So what is the goal of this whole entire system? And to sum that up, we want to be getting in and out of the market at the right time. Now, this necessarily doesn't mean that you want to be getting in at the lows and getting out at the highs, but our goal is to get a major piece of the overall movement of a market trend. Along with that, again, we're going to say this multiple times, we're looking for big growth stocks. So some of these stocks would be like Syntax, Netflix, Amazon, Facebook, a lot of these big names that made huge growth movements, and that's where you can get those massive gains. The other piece about this is because it's a rule-based system, it's going to help you to remove emotions and trade systematically, which is a huge, important piece to being a successful trader.
The three big rocks. Rock number one, only buy in a market uptrend. This is a huge rule, and in future episodes, you'll be able to see why this is so critically important. Focus on companies with big earnings growth that have a new product or new service, basically the companies like Apple, Facebook, Tesla, any company that's changing the way we work, live, or play. And then three, buy companies that are being bought by institutional investors and stay clear of those being sold by institutions. Most people don't think about this, but institutions are the people who drive the market because they're not buying 100 shares or 200 shares or 500 shares. They're buying tens of thousands and hundreds and thousands and millions of shares.
So when we say canceling is an acronym. And the reason they developed this acronym is it makes it very easy to remember exactly what we're looking for when we're looking through all these charts. So the CAN is where you get most of your fundamental acronym from. So the C stands for current quarterly earnings and sales per share. What we're looking for is big percentage increases in both of these areas and accelerated growth. That's ideal. And that shows that the company itself is growing. A is going to stand for annual earnings. And same thing there. We're looking for annual earnings of a company to be growing and accelerating. And that's going to hopefully be the same with the stock price. And then the N, this is going to be new. And what that stands for is new companies, new products, new services, new management, and new highs within the stock. All of these new things that, again, are changing the way we work, live, and play are what are going to drive a stock price up.
Then we have the SLIM, supply and demand. That is the supply of stock that's available to be bought by the public, and the demand is the demand that is being sought by people buying that company's stock. So what you want a company that has a good bit of supply, that there is volume that you can get in and out of that stock. But the key to S is the demand that is coming from individual and institutional investors, and particularly the institutional investors. L, is it a leader or a laggard? We're looking for the leaders. We're looking for the leading groups, the leading industries, and the leading companies in the leading stock market that's going up. Then I, as I stated before, institutional sponsorship. This can't be stressed enough. Institutions are what drive the market. It's they're buying tens and thousands and millions of shares. And then the market direction, this is 75% of the strategy. This is when the market's going up, 75% of the stocks go up. And this is so key and critical. We're going to go into this in great depth over the course of many, many years while we're doing this podcast. It's so critical. I can't even tell you.
Yeah. My favorite quote that they always say in the book is with the institutional sponsorship, it's not, your mom or your uncle or your friend moving the stock market. It's the institutions. I think that's a good way to put it in like picture in your head.
Your Aunt Ginny.
Yeah, your Aunt Ginny. All right. So how do you know when to buy these stocks? You've used all this information. You're starting to find all these big growth names. You see the earnings and everything going up, but the timing is key. So when do you know, or when do you buy the stocks?
Chart patterns. Chart patterns are what tell a story. They're literally what's on display of the volume and price action, and they're right there for you to see in real time. And by studying weekly and daily charts, you'll be able to see and identify the opportune time to buy it. The system gives you actually an opportune time to buy it, and that we could go into that's probably one of the more critical pieces is when to buy, because that also is going to give you an idea of when to sell, and buying at those critical times. Those components are both there.
Yeah, this is like almost a sneak peek into what the actual institutional investors are doing. It kind of shows their hand a little bit if you know how to interpret these charts, and then you get on, you ride the coattails of them. So the big pattern that we're actually looking for, and one of the more successful patterns is called a cup with handle, and that is because it resembles a cup with handle. So below, these are all the traits that we're looking for to determine that this is the right chart that we're looking at. So the first thing is we're going to see a 30% prior uptrend, and that's where you see on the left side as the stock's rising up. And then at that point, you're going to see a correction. Now, this correction is what's forming the cup. That's going to be a correction or a base step somewhere between 20 to 30% ideally. The length of that cup is going to be somewhere around 7 weeks minimum, but it could be a little bit longer. Now, as the stock's starting to go up on the right side of the cup, we're hoping that a handle is going to be forming, and that handle should be forming on the upper half of the cup. Now, as that handle is forming and the stock is slowly starting to decline slightly, we want to make sure that all of that volume is decreasing in the handle. And that means that the people selling that stock, that's your Aunt Jenny. That's not the institutions. The light volume and the light decrease in the stock means that the institutions are holding onto that stock. And then just as that stock starts to break out through a buy point, you want to see a ton of volume, and that's the institutions buying there. Now, that buy point is going to be 10 cents above the top of that handle. But you do not want to buy any more than 5% off of that buy point of a 10% or more. This is also based on the weekly chart. That is the most important part. A weekly chart is what we're looking at. There will be cup and handles on daily charts, but ideally weekly is the best.
Other patterns are the cup, double bottom, saucer with handle, flat base, ascending base, and probably the most potent, the high tight flag. And again, we'll get into these other patterns as we go along with the podcast.
Yep. And as we were saying before too, we'll be putting links in the description. All of these patterns are very, very in-depth breakdowns within How to Make Money in Stocks by William J. O'Neill. So you bought a stock's going up, but now what about selling? Or it could be going down. So what do you do after you buy a stock? Now, when do you sell it?
They're basic sell rules. And one of the parts about this, as we said in the beginning, canceling is a rules-based system. So the key to the system is to cut your losses, protect your capital. You want to have a 7 or 8% sell rule. I can't tell you how important this is. This is going to save you time and time again. So that's one way to sell. The other way to sell actually is, and this is the most fun way, is when you're locking in profits. You're having a 20 to 25% gain. Depending on the market, you're going to be able to use that, and we'll get into that depth about that. But you're selling as the stock is moving up, and you're hitting a 20 to 25% price gain. Unless there is a rule, it's called the 8-week hold, and if your stock is up 20% or more in 3 weeks, you must hold it. The overall market direction changes to market and correction. You begin to get a tighter sell rule going. That begins to be a little bit more tricky, but we will be able to guide you through on that. And then there are more rules in how to make money in stocks, and it explains everything. But again, this is so key. This is part of the rules-based system. You don't see this on CNBC, the Wall Street Journal, Business Week, Fortune, and Forbes. This is what part of what makes the system awesome.
So on top of just having all these rules, there are some keys to executing and being successful with the system. The first thing that I always say is you have to read, you have to watch, and you have to study. Luckily, we live in a day and age where resources to learn pretty much anything are readily available via the internet. So the first and foremost, it's how to make money in stocks. That is the trading Bible for this strategy. That is the number one book. You're going to read it again and again and again. And I promise you, every time you pick it up, you're going to pick something new up because you're going to be learning as you go. IBD also has a ton of resources. On their website, you can go. There's plenty of things there that are also going to help to teach us. And again, all these links are going to be down in the description. Another big part of this is having a routine. So the way you're going to be successful is you're going to have to stay on top of the market. So you're going to be building your own daily routine, and most importantly is the weekend routine. And that's where a lot of the research and planning for the week ahead is going to be done. And that's kind of where this podcast started. We decided to take our own weekly meeting where we shared Steve and I's weekly routine together to everyone else so that we can kind of build this big community. Now, performance review is a way to kind of see how you're doing. And we talked about this in one of our episodes. It's looking into the accountability mirror. And it's being able to say, where did I do things right? Where did I do things wrong? And then correcting from there to continually improve. And the last thing, and part of why this podcast is called Disciplined Mind Investing, is don't overlook the importance of mindset and controlling emotions. With a rule-based system, the goal is to eliminate your mind and your emotions having you do things without thinking things through. But we all know that you could still stray from the plan. So keeping your mindset and controlling your emotions in check is what's going to help you be really successful with the system.
And don't. There are a lot of don'ts. Don't listen to stock tips and picks from family, friends, and so-called professionals. As you've seen in this world, the professionals aren't as professional as you think. Don't listen to the news and the media. I can't tell you how important that is, because as you've seen with the coronavirus, all they do is give you misinformation and fear to keep you watching them. Don't, and this is so key, make excuses. All trading, all your results are your fault. You made the mistake, or you can pat yourself on the back if you did something successful. It's part of the mind part of the podcast. And then don't think you'll get rich without doing the work. Going back to what the last slide, Campos was talking about, the weekly routine and the daily routine. You have to do those. It's like working out or doing anything in life. You got to approach this every day as something that you're going to win. And I'll even put it even more pointed. If you're going to be professional and you want professional results, you're going to have to work. If you want average and mediocre results, don't work.
Absolutely. And if you ever take a look at our stories segment that I put up there, I talk very in depth about, there was a point when I was starting to trade where I stopped doing the work and my portfolio showed it. And then I started acting as a professional, started getting Excel spreadsheets and really putting in the work and being disciplined and committed. And then that's where I started seeing success. So I can't stress that enough. So where do you go to start learning? Again, in the description, we're going to have all these links, but here are some of the big resources. The Bible, How to Make Money in Stocks by William J. O'Neill. That is where all of this comes from, and that shows every single bit of the strategy that you're going to want to learn. The second book is called How I Made $2 Million in the Stock Market by Nicholas Starvis. Now, this is a story. Nicholas Starvis, he was a dancer, but he started trading stocks. And his story of how he learned is going to show you a ton of things what to do and what not to do. And ironically, his strategy actually does mirror some of the principles within William J. O'Neill's book as well. So they kind of go hand in hand. The website, investors.com, and that link right there, which is IDB Universe, that's going to be all their learn information on their website, articles, webinars, videos, you name it, a lot of resources on there that are going to help you speed up the learning curve. And this, I cannot stress enough, no matter what, honestly, no matter what level you're at in trading, IDB does trading summits. They're 100% free. They are all across the country, major cities, and a lot of the big investors from IBD will go there. They will present to you, explain their trading system, and answer questions. It is an amazing resource, and I can't stress enough, it's free. So like we mentioned, we started this weekly show because me and Steve were going and meeting together and helping each other to stay on top of our routines and stay on top of the market. And we decided that we were going to share that with everyone. So we started Disciplined Mind Investing, and we're hosting a weekly show. We're discussing the cancel trading, we're discussing IDB resources, and we're discussing the mindset that you need to trade.
Yeah, both of these, as we were saying throughout this video, go hand in hand. The quick wrap is really just our weekend routine, what we used to do at Texas Roadhouse, and then we started on Zoom calls that became the genesis of this. And then part two is the mindset part. Campos is a triathlon psychopath who does crazy athletic achievements, and yeah, we get into that and what it takes to operate at a high level. But also, I mean, a lot of athletics and trading are very, very similar. And we love to get into that part of it. And it doesn't seem like there are many podcasts out there that do it. And we have people who, again, we really appreciate their mindset. John Wooden, David Goggins, Jocko Willink. So there are a lot of people who we appreciate, and we're going to discuss in the future the mindset part of this, and just really questions that some of you viewers might have. And that's really the crux of the podcast. What we'd really like to do is we'd like to be your weekend routine companion. As we're saying, you can have a daily routine and a weekend routine, and we would like to be your companion. If you're doing this alone, you'll have two people you could ask questions to and reach out to on a daily basis, weekly basis, and have partners in doing this. As Campo said, we're trying to build a community around this. As you know, even for myself, I'm the person who taught Campos how to do this, and just even being with people that aren't at the same level as you, but you're teaching them, it's a blessing, because you become a better investor by teaching people and having to articulate to them the rules and what to do. It's really amazing if we could build a community. I really appreciate that, and I hope Campos would as well.
We're going to be following up this overview, actually breaking down every single letter within canceling. So we'll be releasing those over time. But yeah, for now, this is a little bit of an overview. Again, all the IBD information, the resources, everything's going to be in the description, so you can check everything out. And if you got any questions, here's all our information: email, Twitter, Instagram, whatever works for you. Reach out to us. We'll absolutely answer. And, like, comment, subscribe, and we'll be able to answer questions here as well. Oh, and sorry, one more thing we want to add there. Do the work. There is no substitution for doing the work.